Let's bring in this morning, as promised, some analysis of the commodity markets. Peter Maguire joins us from NG Farrer. I heard you gasp when I said iron ore at 145 US a tonne.
Well, good morning.
We're all kind of in disbelief, really, aren't we?
Exactly. Good morning, Brooke, and good morning, Carson. I mean, going back a few months, Brooke, we were debating here whether we'd see, something with a 7 handle, and now you're sitting at 145. So it's been a very, very strong uptick. I noticed that, Fortescue's CFO coming out and saying you're going to see, 120 as an average price. But I think you'll just see continued volatility. But certainly miners must be very happy at these prices. And a couple of weeks ago, we saw those better than expected forecasts coming out of China. A little point on that, and it probably resonates that we all drive motor cars and we're all very conscious as far as global consumption. But 10 years ago, Brooke, or 11 years ago, I should say, China was producing around about 3% of the world's cars. Now it's producing more than Europe. So it just gives you an idea. 42 years ago, Europe was producing 1 in every 2 cars, and now it's producing the best part of it, under China's numbers. So it's certainly about 1/5. So China has certainly come up the curve in everything.
What proportion, putting on the spot, find their way offshore of those Chinese manufactured motor cars? What percentage are just simply for their own consumers?
I'll have to come back to you on next week on that, but I think that it's interesting numbers. Certainly the Chinese are all over their own vehicles. They're very proud of them.
Would you drive one?
I probably would.
You would say that, but...
I would.
Yes,
well, I drive a Japanese, and there's no reason why I wouldn't drive a Chinese
Well, that's
vehicle.
interesting, because there's a big spat between those two countries at the moment. Why is a Chinese motor car superior?
Why is a Chinese or a Japanese motor
Yes, a Chinese one, because you said you would drive one.
I'd drive it probably on price more than anything else.
Okay.
I mean, it might match your Bentley, but I'm sure that it'd be very close to...
Come on, safety.
Yeah, but I think that they've modelled a lot of those initiatives off the Japanese, and I don't think there's too many issues as far as, safety and serviceability and reliability.
I think we're talking about commodities at some point.
Well, we're talking about iron ore, and they touch a lot of things.
Should we segue into the yen? That's kind of, we're in that region, aren't we?
What is the segue? Yeah, let's go.
Well, we've been in the region, so let's talk the yen, because that's been the big kind of, I suppose, vote-winning catch cry, hasn't it?
Yes.
For Mr Abe.
Well, exactly right, and you're now running at around about 90 yen to the dollar, so I think there's every chance you could see this year 95, if not parity. So that gives us a real understanding. Mrs Watanabe will really enter the market soon as far as driving the price of the yen lower.
Is this the key driver for us in 2013 in the Asian region?
What, the yen? Value of the yen?
Yen, Abe, BOJ...
It's certainly a positive, and I mean, we need to see Japan really come back up the curve because, we've seen 20 years of a depressed market over there, and now we're at 2013. We go back to the peak of the Nikkei at 39,000 points, Brooke, in '89, and now it's trading at the best part of 10,000. So it's a long, slow ride, and the only way to do it is to really reinflate asset prices and try and get your currency underlined and make it a little bit weaker so it supports the internal economy, and I think that's what Japan needs.
It's kind of interesting because the journal's reporting this could spark copycat behaviour. We've already seen it in South Korea. Of course, the EU and the US are the key culprits, you might say.
Yes.
Race to the bottom on rates, is it kind of, when the dust settles, what about inflation?
Oh, well, that's what people want. They want to see a reinflation of asset prices. That's been the whole initiative, and unfortunately Japan haven't been able to reinflate asset prices, from property across to equities, of course. But yes, it is a race to the bottom. How much further can we go? I don't think you can go too much further, but the reality is you'll just lengthen the timeline as far as these low rates. So I think the 13 is going to be a pretty slow year for rates, but currency wars, it'll be very interesting.
What?
Yeah.
Go,
I was going to say, speaking of wars, what about Iran? Because this is the kind of big touchstone, litmus test for the crude price.
And kind of as it relates back to even, we're talking about the fiscal cliff because we're worried about whether the US economy can, handle any kind of drama at this stage, and that would include, say, oil prices actually spiking as a key risk for this year.
Well, the way I look at it, and many analysts are saying you're going to see something in the Northern Hemisphere spring. Things will start to warm up there and we're still worrying about what's happening with Syria. That storyline keeps on going week on week, but many analysts again are saying that spring and summer you will possibly see some form of conflict between Israel and Iran. This year could be the one. So hopefully it doesn't happen for mankind, but I wouldn't be surprised.
Why do you understand that the people are even talking about that, given that Iran and Israel have been at loggerheads for many, many years? There is a sense, though, that 2013 could be kind of crunch time, right?
I think so, Brooke. You've seen... Israel has had it to the back teeth, and they're not prepared to wait any longer, and Iran's nuclear ambitions seem to be gathering momentum, so the only way to put a handbrake on it is to have some form of intervention. And I'm not a political scientist, but I'm pretty sure that the Arab Spring will continue, and I don't see that side of it really abating.
So holding comfortably above what? The 109 handle
I
for
think
Brent?
Absolutely, 109
Right.
to say 113 range, but it's hard to put a headline as far as, if you have that military intervention, you could see a 125 snap very quickly.
How much is it related, incidentally, in terms of underlying fundamentals, if you strip out the geopolitics,
Yeah.
a vote in favour of more growth in the US economy as a barometer? Is crude telling us anything there,
Well,
stripping out the geopolitics?
Yeah, well, what's interesting is that because of the shale revolution, you've seen huge increase as far as the US and, of course, Canada. So they're becoming more and more able to provide their own growth, and we all know that the US is going to be its own provider of its own energy sources over the coming, not too distant future, say 5 to 8 years out. So that realisation is that we're looking at further exploration into those forms of new age energies, or be able to retrieve energy from deep within the Earth's crust.
Pete, when you look at some of these issues even that we've just discussed in the last few moments, how does it kind of square up, because they're all big ones, how does it square up with the optimism we're starting to see about equities and the performance of 2013? Or do we always start the fresh year with optimistic ideas about where equities could go?
Well, I think first off, we've been bashed and bruised pretty much over the last 4 to 5 years, Brooke. And many people are saying, we're seeing a little bit of a headwind versus, a backwind. And we've really been, a bit of a reality check. The FTSE's sitting at about 5,900. We've seen analysts coming out and saying, Credit Suisse was saying they're the most bullish, running at about 65 to 6,600 by year's end. So that's fairly strong growth as far as the UK economy. We're also saying that you're going to see a continued upswing as far as the S&P 500. I'm sure there'll be pullbacks, but it'll go to, never seen.
Is it just January analysts
headline
talking
numbers?
up their own books? I mean,
It could be, but
come on.
manufacturing numbers. Have a look what it's done in the last. Well, it's been a pretty good year. I mean, when you think of what happened in the market, you're looking at the S&P up nearly 13%, and I think that'll just continue. So I wouldn't be surprised to see, a 1480 to 1500 number sometime within the first 6 months on the S&P 500, and then later in the year possibly 1550 taken out. So that's a relatively conservative number. We'll just have to wait and see. But there are many factors that go into the next 363 days, aren't there?
Bad year to die if you're in the US. A new surcharge from Obama on that front.
Hopefully we don't.
An expensive time to die.
All right. Well,
Anyway.
hopefully I won't be travelling to the
Stay
US.
alive and well.
Yes,
Right.
exactly
We'll
right.
talk
To us all.
Till next week.
Thank you,
Cheers.
Carson. Thank you, Brooke.
Chief Market Strategist and Economist Angie Farrow there, Pete Maguire.
OK, we will take a